Welcome back to the Dividend Diplomats YouTube channel. You got Lanny, Bert, the Dividend Diplomats. Today we are going to talk to you about one dividend king that may be a screaming buy.
Smash that subscribe button. Give Bert the Hurt and I a thumbs up. We're cruising on our way to 10,000 because we just crossed 9,000 subscribers. So thank you for everybody. We appreciate all the patronage. We cannot wait to talk to you about, is this a time to buy this dividend king?
Maybe it is, maybe it's not. But what's first, before we dive into this stock, what is one thing that we have been saying every week here in 2021 that changed this last week? The market has been on a tear. It continues to hit record high after record high. The market is still up, very much so compared to where it was last year. But what changed this week, Lanny?
So the Fed actually came out after their meeting this past week, during the week of, again, June 14th. That they may start to taper down in the upcoming 18 months. And not only that, in the upcoming 2.5 years, the Fed announced that we should anticipate 2 rate increases. For those that don't know, we're in that 0 to 0.25% in the Fed funds rate. So having rate increases could increase companies across the board for their borrowing costs. And tapering essentially means reducing the amount of cash that they're putting out into the economy as they're buying up securities, corporate debt, mortgage backs, et cetera, et cetera.
Yeah, so that's huge when you think about it, because the cash going into the market, cash going into earnings, increases the value of the market. So that's partially been what's going on behind the scenes to help prop up the market and continue pushing the S&P 500 higher.
And lower borrowing rates right now saves companies money on all of their borrowing.
Exactly, Lanny. So at the beginning of the week, before the Fed made these announcements, the S&P 500 was trading around 42.55. The S&P is not really trading, but that's the level of where the S&P 500 was. It ended the week at 41.65. So that announcement alone, the tapering effect that Lanny was just talking about, you can see the real impact that had on the market. And you open up your portfolio and you can see those prices falling. And that's why this Dividend King is once again on our hot list.
Exactly. And so the market corrected around between 2 to 3%. You probably saw stock prices drop. Some may not even have dropped, but some that did, maybe all the way up to about 5% even for some solid companies. But that's what we love. As dividend investors, we love when things go on sale. And that's just what happened in the stock market. Now, not to go crazy though in the stock market, because realistically, stocks are only 2 to 3% from their 52-week and pretty much 104-week highs.
Yeah, the stock market entering the year was below 4,000 for the S&P 500. So we are still at a very strong positive year to date. But it's encouraging from us who's trying to put cash from the sidelines into the stock market to see some red days where it's sustained red, where you may be seeing other days where the market continues to go down.
And we'll come out with another video this week about all the stocks we bought. And I'll say this, majority of my stocks were towards the end of the week when the stock was dropping.
Yeah, and for me, I bought one stock that was featured in a video last week that was undervalued at the beginning of the week. And as the price continued to fall over 10% during that week,
Bart was just
I just kept buying. Yeah, I just kept lowering that cost base.
Smashing that buy button like Kramer, right?
Yeah, exactly.
Buy, baby.
But that was not the stock we're here to talk to you about today.
Yeah, the stuff that we want to talk to you about today is a dividend king who has increased their dividend for over 50 years. This dividend king is also a dividend aristocrat. They're in the S&P 500 with, again, over 25 years. And Bert, this is your company, I like to call it. This is also the people's company.
I wish this was my company, but it's not. We share it all together. And the reason why Lanny's saying it is my company, it's because it's the company I have been adding once per week to my portfolio and my wife's portfolio following Lanny's Vanguard VYM purchase strategy. All right, everyone who watches our channel, we know you know the company, but if this is your first time watching, that company is Johnson & Johnson, ticker symbol JNJ.
Johnson & Johnson, they've been around forever. We all know the brands that they have in their portfolio. We'll share here a quick screenshot of the brands in case you don't know them. J&J also has their COVID-19, coronavirus 19 vaccine, which I believe, Bert, you just mentioned that they're kind of deploying across the world right now.
Yeah, we had some hiccups here in the United States with the rollout, but there have been a lot of news releases. We'll put some of the titles down here. The J&J sending their vaccine out to a lot of countries. to help get other people vaccinated worldwide. It's kind of cool to see them participating in the worldwide effort to get as many people vaccinated as you can, not just here in between the Atlantic and the Pacific.
And the cool thing about Johnson & Johnson as a great stock to buy, and I think it is a dividend king right now, it's a great stock to buy. As everything else is appreciated 15, 20, 25%, even more this year to date, J&J stock price as a dividend king, good old reliable as I keep referring to them as, they've actually only had a price appreciation of 2.92% year to date.
Yeah, so that's a very interesting fact, and it came down. It was in around 170 earlier in the month, even though I was continuing to buy. It's great seeing at this point. I might have to buy and continue adding them in addition to my weekly purchase strategy at these metrics, because there aren't too many companies that have only increased 2%, especially a dividend king with the long-term history like Johnson & Johnson.
And if we flash back to April, though it wasn't quite up to their 6 to 7% dividend growth rate, they actually did announce for their 58th to 59th consecutive year another dividend increase.
Yeah, they're one of the longest tenured dividend kings out there, so you can't complain. It was a nice solid dividend increase that was in line with their 5-year average, as we'll cover in a little bit as we go through the metrics of our stock screener. And it's always great to see, as Lanny said, good old reliable, delivering those consistent results, increasing their dividend.
I'm drinking espresso out of my late grandmother's espresso cup, so.
Yeah, we talked about her sauce last week.
Yeah.
We're talking about her espresso this week.
Exactly. The proof is in this little coffee cup right here. But J&J, through the first quarter this year, they had great and strong earnings per share growth compared to last year, obviously. But with an EPS of $2.32 in one quarter alone, very promising, and they're really showing that they want to be back on that track record of year-over-year earnings per share growth. Bert just reported that COVID-19s are kind of being deployed across the world, and if it's anything like Pfizer, we know how valuable and how much money this will bring to Johnson & Johnson, sadly, but also thankfully, as a shareholder. And then Johnson & Johnson, again, with that stock price only rising 3%, it's very hard to find undervalued dividend stocks in today's market, let alone one that Bert and his wife have been buying week after week. So now the question is why do we think this is a stock to buy right now, Bert?
There's only one way to answer this
Only
question.
one way to find out.
Got to run this sucker through the Dividend Diplomats dividend stock screener.
It's the gauntlet match. It's the Hell in a Cell. It's the I quit match here.
Yeah, that's exactly what it is. But we're never going to quit trying to find you undervalued dividend stocks.
We will never tap out, brother.
Yeah, the 3 metrics: price to earnings ratio less than the S&P 500, payout ratio less than 60%, and a history of increasing dividend. Check the video above that you'll see flashing above our heads if you want to learn more and see how we find those stocks using the stock screener. But Lanny, roll us in there. Metric 1.
We're rolling in. We're coming down the ramp right now. We're entering the ring. Johnson & Johnson currently trading at $161.98, really getting almost close to below that $160 mark. Their analysts are projecting $9.52 this year. So they're really hoping that each quarter that the earnings is going to keep getting better, because if you analyze Q1 throughout the next 4 quarters, it's actually less than what the analysts project. So they're very hopeful that the vaccine revenue
gives you that bump up there.
Gives you that bang for the buck, baby.
Yeah, the analysts must know something that we don't, but where you can rely on their number, because it's the average analyst from Yahoo, and there are a lot of analysts covering this dividend king.
So when you do the math of the stock price divided by the earnings, that's going to be your price to earnings ratio, and it currently calculates out at almost a flat 17 times earnings.
Perfect, and that's why we love Johnson & Johnson. It's never the cheapest stock, never the most expensive. It's always somewhere in between that 16 to 18 PE ratio. Yeah, right smack in the middle of the range. That's why we like them at this price.
Like them at the price. The S&P currently is trading at 45 times earnings. Future earnings, price to earnings ratio on the S&P 500 is around 21 to 22. So definitely undervalued.
Yeah, metric 2, that dividend payout ratio.
The best.
Remember, we look for under 60%, but we think that perfect payout ratio is 40 to 60%. Why, Lanny?
Because that shows that the company likes to reinvest back in their business, at least around half their earnings, but likes to pay you, the shareholder.
So after that 5% dividend increase that they announced back in April, they pay an annual dividend of $4.24. You divide that by the forward EPS that Lanny referenced earlier, that gives you a perfect payout ratio of 44.5%.
Perfect. Wendy Peppercorn.
Yeah, and then moving into the third metric, that dividend growth history, and that's why we love this company. we've mentioned it
I
probably
love this stock.
50 times already, they're Dividend
Yeah.
King, so you know they have a history of increasing their dividend, but it's about the growth rate, and that's what we like about them.
Yep, that dividend growth rate, on average right now, the 5-year average is around 6%. Not the highest, not the lowest, above inflation, which is, has now hitting historic measures over the last 20 years at 4% and 5% respectively.
Would you say it's reliable?
I would say it's reliable. I would say that your income continues to grow and outpace the increasing cost of goods.
Exactly. Good old reliable. Johnson & Johnson is where they got our nickname for them from.
Exactly. Now, you're looking at the dividend yield when you take into factor their actual dividend of $4.24. Obviously, you break that out over 4 quarters. Dividend yield's over 2.6%, Bert.
Premium to the market. The market's in the 1.5 to 1.7% range. I can't remember the exact percentage right now, but it's well above that mark.
Oh, yeah.
And that's great. I mean, it's a very solid yield. You couple that with the 6% dividend growth rate. Very solid dividend factor right there.
Yeah, you're in that, again, a north of 8, almost 9% factor between the yield and the growth rate. Again, it's just a great kind of consistent stock that produces income for you. And as all of us, and hopefully many of you, are on your journey to financial freedom and want dividend income to be a very powerful source of passive income, Johnson & Johnson should be a staple. And that's why we also consider them one of our top 5 foundation stocks for your portfolio. So Bert, kind of what's your outlook right now? What's your continued plan? And let's hear your roundup with Johnson & Johnson.
Okay, well, I'm obviously going to continue trucking through my weekly purchase.
He's
I
doing
committed
it.
to 52 weeks
He's
of
committed.
Johnson & Johnson, but I'm going to be honest with everybody here. If that price dips below 160, you're going to see me adding to buying another couple shares during the week because I want to keep building my position in
Ain't
them.
nothing wrong with that.
No, what about you, Lanny?
If it dips below 160, it's going to be back on my hot stock watch list. May have to add a few more shares to my wife's portfolio. I have quite a good position with Johnson & Johnson, but I give my wife a couple shares, why not?
We love it. So everyone, just to summarize, PE ratio well below the market, perfect payout ratio, strong dividend growth rate, phenomenal dividend growth history, yield above the market, and a price that has not appreciated during the year, well below what's growing up. Yeah, I got this. We haven't gone through that many metrics here, so we're good. Screaming signs of undervaluation right now, and possibly time to buy this Dividend King. I will continue doing it. Laney said he's maybe, and it's going to be hot on his watch list if it continues to fall.
Again, if you like the video, give us a thumbs up, subscribe to our channel, and let us know what you plan on doing with Johnson & Johnson. Do you think this is a stock to buy right now, or do you think there's another Dividend King or Aristocrat that's a better stock to buy? Let us know in the comments.
Exactly. And again, everyone, thank you for your support as we continue our journey to 10,000 subscribers.
This was Bert, and this is Lanny from the Dividend Diplomats.
Over and out.